of Somani Ceramics. Mr. Somani, thank you very much for joining us today on Deep Dive. To begin with, over the last 3 to 4 months, the ceramic industry has witnessed significant volatility, largely driven by rising energy costs. Fuel accounts for nearly 30% of the total production cost for ceramic manufacturers, making it one of the biggest cost components. How has the industry been coping with this challenge, and what steps have your company taken to mitigate this impact?
So yes, there has been a lot of volatility from the 28th of February, which is when the war broke out. Gas prices have gone through the roof. Our normal gas price used to be 42, 43 rupees, maybe 45 rupees a standard cubic meter. That went up to 100 rupees a standard cubic meter, and it's down to about 83, 84 rupees a standard cubic meter. So there's been a huge disruption there. What that did was we have a cluster in Morbi, which is about 850 units. Now, these guys were buying gas from all kinds of sources, whether it was LPG or was it propane, and they were buying it not because it was substantially cheaper than GSPC or GAIL or other gas authorities, but they were buying it because they could buy it in cash. And therefore, there was a disruption. The last few years, the industry has gone through a big downturn in terms of a lot of capacity coming in on the back of exports. Exports didn't happen because these various wars broke out. First it was Ukraine, then it was the Israeli war, and now it's this one. So with that, the freight rates going up, the material was getting dumped here. And when they were dumping material, they were cutting costs, which is where they were doing a lot more cash transactions, buying cash, gas in cash, etc. So this played to our advantage because we, being organized sector, we were buying gas from either IOC or GSPC or GAIL, and also certain CGD networks. Because of that, we got lucky. When the gas got shut down in the Hormuz Strait, we were the beneficiaries because the government took out a gazette that we would get 80% of the last 6-month average. Now, we had a last 6-month average to talk about, unlike people in Morbi, because they were buying from anybody and everybody on the street. So as a result, during the disruptions, prices went up, but we were still running. Our plants were running. Morbi shut down for about 2 months, between the 15th of March to the 15th of May. And as a result, there was a huge pent-up demand. What it did for us is we were able to offload a lot of our inventory. Last 3 years, because we are organized players, we play by the books. We were the losers in the last 3 years, and we were gainers in the last 3 months, where we could offload the inventory. Our capacity utilization went up from 79-80% to almost 100% now. So this has been a big boon. The prices have gone up of tiles by about 16-17% for us. When it goes up for 16-17% for people like us, it goes up approximately 35% or more for the Morbi vendors because they were that much cheaper. So this has been a big positive, although the prices have gone up, but it's been a big positive. Having said that, in the last 24 to 36 months, prices came down in the tile industry for tiles by about the same amount. So the increase in cost was absorbed fairly quickly.
As you pointed out, one of the key takeaways from this entire episode is that the informal sector seems to have been impacted the most and most severely than the organized players. For the formal sector, with stronger systems and greater financial resilience, the players are much more better placed compared to the informal players. Do you think this has accelerated the formalization in the entire ceramic sector, and how significant is this shift when it comes to organized players like yours going forward?
It won't really get formalized. I mean, they still continue to do a lot more of these underbillings, cash billings, etc. But obviously it will go down because now they also have to buy gas from GSPC, and GAIL and all of those. So to that extent, it will go down. Their prices have gone up. And I think the biggest advantage which everybody's had is that they also are in a situation where there's a pent-up demand. When there's a pent-up demand, prices don't come down very quickly. So they are also witnessing a pent-up demand of the 2-month complete closure of Morbi. So currently, the entire industry is benefiting from the 2-month closure.
And Mr. Somani, is it more beneficial to the organized sector or organized players as compared to unorganized players at this point in time?
No, it is more beneficial to the organized players.
And will this help you or the industry in consolidating further as well?
So even during this pent-up demand currently, we have seen that 20% of Morbi hasn't started. So if it has not started in this kind of scenario where there is material required by the market, I doubt they're starting ever again. So I think 20% of Morbi's capacity is off the grid forever, which means that we'll need more tiles. And therefore, if you have seen, we have announced that we're doing a fairly large expansion in the south, about 9 million square meters. Plus, we're doing a lot of balancing equipment within the company, within all our lines to augment more capacity. So I think another 3 million capacity would get augmented by driving up efficiency, driving up productivity, and also while we do that, we will also increase our value add mix.
Mr. Somani, if Morbi constitutes 20% capacity and this capacity is not going to come back, are the organized players expanding enough and putting in capex that will be more than sufficient to take care of the demand-supply mismatch?
There's not really a demand mismatch considering Morbi was running at 70, maybe little shade under 70% capacity utilization. So from that point of view, there's enough capacity in India for the next 18 to 24 months. And that's exactly what we are seeing. And therefore, we are expanding capacity to make sure that we have enough capacity for the next 24 months going forward. So this capacity will get in place in the next 15 to 18 months.
Mr. Somani, you mentioned that industry has been able to raise prices by around 16 to 17%, but that essentially brings realizations back to levels seen about a year ago. After offsetting for the sharp increase in input cost, going forward, do you see room for further price hikes or have prices largely stabilized? And has the gas supply situation improved? And are companies like yours actively exploring alternate source of energy to reduce dependence on natural gas?
Unfortunately, there is no alternate energy. Having said that, some of our kilns are hydrogen ready, but then where do you get the hydrogen and what price? So that's a long shot, but currently there is no other source of energy for firing our kilns. We have found other sources of energy for firing our spray dryers and everything but the kiln. And that was thanks to the being in the NCR region and the NGT orders so coming in place. And therefore, we moved all of those supplies to biogas, so various kinds of biogas. So a good 40 to 50% of our supplies now are biogas and the rest of it is gas. There is no alternative gas. Your question on price stabilization, yes, the price seems to have stabilized. Unless there's another escalation in the war in the Middle East. But currently it seems to have stabilized. There was a small increase in price in July, but we hear that this would probably start tapering off towards the end of the year. But I also hear in the same breath when we speak to agencies like or companies like GAIL and various other gas authorities in India, this is what they have to say. They said that the 45 rupees a standard cubic meter price is never going to come back. When they say never, they're predicting 18 to 24 months. So they said that the new normal has been reset to anywhere between 60 to 70 rupees a standard cubic meter. Currently, it's at 80. So yes, to that extent, it would go down, but it's not going to go down to what it was when the war broke out.
What about alternate to natural gas, maybe fuel as well? Is that availability also there?
Yes, so propane is currently not fully available, neither is LPG, but it would get available in the coming days. And yes, our kilns are also fungible between propane, LPG, and natural.
And while LPG availability may be a little limited due to limited availability and government regulations, what is easier to access for you? Is it the natural gas or propane?
Any day natural gas. We would rather use natural gas, even if it's a couple of rupees cheaper, propane being cheaper. We would keep using natural gas because it's piped. There is no problem in using natural gas. It's the safest way of using a gaseous fuel. So for 5-7% cheaper propane, we never did move to propane even earlier, and neither will be even now.
You briefly spoke to us about how there is no other alternative fuel. Electrification of this industry, can that be one of the ways forward?
So we have put in solar power. You would have heard recently we put in 12 megawatts. We are currently in right now work in progress for another 12 to 15 megawatts. But that's for the electric parts of it. But the kilns can't run on electricity. It's way too expensive because we use a lot of energy. We use approximately, we're firing our kilns at about 1300 degrees. So electricity to power the kiln to 1300 degrees is just not viable.
Mr. Somani, based on your assessment, do you believe fuel prices are likely to remain in the current range of around 80 to 85 and that earlier levels of around 45 rupees per SBU are unlikely to return anytime soon? Is that, and if that is the new normal, what would it take for the Morbi style industry to return to its earlier levels of production and competitiveness? What changes in terms of energy prices, demand, policy support, or any other factors would be necessary for a full recovery?
It's completely up and running. The inefficient players, the 20% of Morbi is out. They'll never start. But otherwise, the rest of the Morbi is alive and kicking. They are fully running.
Mr. Somani, how do you look at the export market? Because my understanding is that export market was also hit because of the Middle East crisis. And how are you as an industry leader managing that as well?
So we don't export. We are largely a domestic brand. 97% of our products are domestically sold. But yes, Morbi was a big exporter. About 35% of Morbi's produced used to get exported. And that's what got hit in the last 3 years. I think that's also a silver lining now, being Middle East being their largest off-taker. There's been a complete shutdown in the Middle East for the last 3 months. So we do envisage the minute the war subsides or comes to some kind of semblance, there would be a huge pent-up demand which will come out of Middle East also. So that's very good news for Morbi.
And for an organized player like you, is this an opportunity in waiting?
We would rather increase our footprint in the domestic market, which is far more lucrative and also more predictable.
Can you also give us a sense of the domestic market demand? You have taken a price hike. What kind of demand or price elasticity is there in this market? Does demand get impacted with price, or there is an upgrade or downgrade that happens along as prices move up and down?
No, downtrade definitely happens as price goes up. But as far as demand is concerned, I think there is a lot of demand. You rightly said at the beginning that the real estate sector is doing well. Whatever got launched 3-4 years ago is coming to tiling stage now. So it's good times for us for the next 24 months, and the real estate sector continues to do well. Otherwise, the price went down, so the increase in price was not as much. 16-17% on a 35 rupees standard, 35 rupees a square foot price is not a very big amount from a builder's perspective, whether it's a home buyer or a large builder or government. For that, it's not an arm and a leg, 3-4 rupees. It doesn't move the needle for the entire building cost. So tiles, to that extent, has not seen a huge demand downtrend as a price increase. So that continues to grow. I think the domestic industry would grow from the low single digits to high single digits as far as volume is concerned. And organized players will grow at about 20-25% because value volume combined, because we've taken a price increase of about 17%. So that is a tailwind for the entire organized sector.
Mr. Somani, how does margins move from here for the industry and maybe for you?
So margins are a function of capacity utilization, and also margins are a function of how much we are discounting in the market. So both of them for the entire industry. I can't talk of Somani, we are in the silent period, but generally the entire industry is seeing an uptrend because of this pent-up demand. Everybody is moving towards the 100% capacity utilization, and obviously when there is a decent demand, then you discount less. So generally the industry is a beneficiary of this. Of course, 2 months we did suffer during the shutdown, but otherwise it's a beneficiary.
So did your volumes or industry's volume get impacted in these 2 months, or the organized sector was able to manage it much better?
No, so about 70, depending on the organized sector brand, but between 70 and 80% gets outsourced. Between 20 and 30% gets outsourced from Morbi. So that got impacted for everybody because all organized sectors who were buying from Morbi was completely shut down. To that extent, that last 10 days of March and 45 days running up to 15th of May, that was a dent. We didn't get enough material because the factories were shut there.
You briefly mentioned the possibility of pent-up demand emerging in the domestic market. Given the strong momentum in the real estate sector and the fact that projects sold 3 to 4 years ago are now entering the finishing stage, where the demand for tiles, pathways and adhesives typically pick up, are you beginning to see that demand materialize? How do you see each of these segments evolving over the next few years? And in your opinion, which categories do you believe will drive the next phase of growth for the industry?
All of them are growing. I think adhesive, we are at a very small base, and so is sanitary ware. So there anyway, we are growing quicker than industry. Tiles, we're a very large player. So tiles also, there's a huge tailwind now. So overall, the industry should see some kind of consolidation starting to happen in the tile industry. As far as bathware is concerned, again, all the brands which had to come in have come in from international players. So the competition landscape has intensified in the bathware. So we need to work harder to keep at it to get our double-digit growth, so which we will. Adhesive, we're a very, very small player, and construction chemical also very, very small player. So there, I think percentage growth is irrelevant because the industry is so large and we're extremely small. So that obviously will keep growing at a much faster pace, but in absolute numbers, it's insignificant.
Mr. Somani, looking at the broader tile industry, what should be the optimal diversification strategy at this point? The sector has faced multiple challenges from volatile fuel and energy costs to geopolitical disruptions that have impacted exports. In contrast, the domestic market has remained relatively stable, supported by steady housing and renovation demand. In this backdrop, how should ceramic companies diversify their business? Is the focus shifting towards newer product categories such as bathware and adhesives, and expanding geopolitically or increasing exposure to the domestic market? where do you see the biggest opportunities for sustainable growth?
So we've diversified into bath fittings, sanitary ware, and now our latest diversification is construction chemical. So getting into admixtures, getting into waterproofing of all kinds. So that's the latest diversification we have done. So that's I think beyond that, within tiles, we are wanting to create more verticals. We're trying to create more usages of tiles, be it facades, outdoor areas, and all of that. So I think there would be further diversification within the tile sector, where we will be finding and giving solutions to our consumers, to our buyers, more alternatives of usage of tiles, which is currently generally looked at as an indoor-outdoor space of a home, but not so much in facades, not so much in large driveways, etc. So I think, or even stations, etc. So I think that's a huge new area which is going to be looked at, which is already there abroad, and it would be looked at now even in India.
Another important trend is the premiumization of the tile industry. As you mentioned, the application of tiles is expanding beyond flooring and walls to such as facades, outdoor spaces, and other architectural uses, naturally driving demand for higher value products. What has been your experience with this trend? How strong is the demand for premium tiles, and do you see premiumization becoming a key growth driver for the industry over the next few years?
I think premium never dies in India. There's always a demand for anything premium. So that's something which will keep growing. The aspiration levels have increased in India. The disposable income is only increasing in India. So from that point of view, premiumization is the way to go.
Give us a sense of the kind of freight increases that has happened for you. Has that also impacted you aside of the energy cost?
So freight has increased for anything which is coming from abroad. Typically, that would be machinery and some raw materials, very, very little, some special colors, etc. But otherwise, largely, tile industry is cushioned because pretty much 95% of our raw materials are domestic. So to that extent, I think the government has played its cards really well, and there hasn't been a very large increase in diesel and petrol. So therefore, there's not been a very major impact on freight as far as our raw materials are concerned. So kudos to the Indian government to manage this crisis so well.
Mrs. Somani, it was a pleasure talking to you today and getting your perspective on the industry. Thank you very much. That was Abhishek Somani, MD and CEO of Somani Ceramics.